Central banks determine, implement and control the monetary policy in their home countries. The Federal Reserve System, often called the Fed, is a cornerstone of the United States economic infrastructure. But before we dive in, please subscribe, hit the bell for more notifications, and give a thumbs up. Established in 1913, the Fed was created in response to the recurring financial panics and economic instability that plagued the nation in the late 19th and early 20th centuries. Before the Fed's establishment, the United States operated under a decentralized banking system, with numerous independent banks issuing their currency. This lack of centralized control led to frequent financial crises and a lack of uniformity in the nation's monetary policy. Before the creation of the Federal Reserve, the United States had experimented with various banking systems, including the first and second banks of the United States. However, these institutions were opposed by those who feared centralized control over the nation's finances. It wasn't until the early 20th century that the need for a more stable and uniform banking system became undeniable. The Federal Reserve System was designed to provide a more stable and flexible monetary and financial system for the United States. It operates as the nation's central bank, overseeing the regulation and supervision of banks, acting as a lender of last resort during financial stress, and conducting monetary policy to promote stable prices and maximum employment. The creation of the Federal Reserve marked a significant shift in the nation's approach to banking and finance. It provided a more centralized and coordinated approach to monetary policy and has played a crucial role in shaping the nation's economic landscape. As we continue to navigate the complexities of the modern economy, it's crucial to deeply understand the history and purpose of institutions like the Federal Reserve. By delving into the Fed's origins and significance, we can gain valuable insights into the evolution of our financial system and the challenges it has faced over the years. This understanding is essential for making informed decisions about the future of our economy and ensuring its stability and resilience for generations to come. As we mentioned, the Federal Reserve is the U.S. central bank, created and founded by Congress under the Federal Reserve Act of 1913 to establish a monetary system that could respond effectively to stresses in the banking system. This was needed following several banking crises and panics in the first decade of the 20th century, like in 1907 and the last decades of the 19th century. As time passed, additional legislation, including the Banking Act of 1935, the Full Employment Act of 1946, and the Full Employment and Balanced Growth Act of 1978, also known as the Humphrey-Hawkins Act. The Federal Reserve System includes the Board of Governors, a federal agency located in Washington, D.C., and 12 Federal Reserve banks around the nation. The Federal Reserve System performs 5 key functions that serve all Americans and promote the health and stability of the U.S. economy and financial system. It conducts the nation's monetary policy, supports financial system stability, supervises and regulates financial institutions, fosters payment and settlement system safety and efficiency, and promotes consumer protection and community development. The 3 key entities. The Federal Reserve System is all the people who work at the Federal Reserve Board of Governors, a federal agency in Washington, D.C., the 12 Federal Reserve banks operating around our nation to help ensure all household, community, and business economic conditions and perspectives inform Fed policies, actions, and decision-making, and the 12 voting members from around the system who serve on the Federal Open Market Committee and help set crucial U.S. monetary policy. Saunders, A., Cornett, M.M., and Erhemjamts, O., 2022. Explain that the Federal Reserve System is an independent central bank in that its decisions do not have to be ratified by the President or another member of the executive branch of the U.S. government. The Federal Reserve System has evolved into one of the most powerful economic bodies in the world and was critical in implementing policies to address the world financial crisis in 2008 to 2009. Even the Fed's hint of a change in interest rate policy can impact markets worldwide. To review, the Federal Reserve's objectives include economic growth in line with the economy's potential to expand, a high level of employment, stable prices, and moderate long-term interest rates. Any speech from its board members can move the international markets fast, which is also one of the Federal Reserve's powers. We reference Saunders, A., Cornett, M.M., and Erhemjamts, O., 2022. Financial Markets and Institutions, 8th edition. Thank you for watching.